In September 2022, the British government announced a budget. Tax cuts, stimulus spending, politicians celebrating. Within 48 hours, bond markets revolted. Yields on British government debt spiked to levels not seen in decades. The pound collapsed. Pension funds across the UK came within hours of complete collapse. And within weeks, the Prime Minister was gone. Removed not by voters, not by Parliament, by a market most people have never thought about. The bond market. This is AxisShift. And before this video ends, you'll understand how a market most people never think about can quietly force governments into crisis. Governments borrow money by selling bonds. Investors lend that money, and in return, they demand interest. Here is where it gets interesting. Bond investors are not passive. If they believe a government is spending recklessly, if they lose confidence in a country's ability to repay, they sell. When they sell, governments pay the price. Yields rise. Borrowing becomes more expensive, and suddenly there is less money for everything else. Healthcare, defense, infrastructure, social spending. The bond market does not write laws, but it can make laws unaffordable. That is power most politicians never talk about. In January 2026, Japan's bond market sent a message the world could not ignore. Japan's debt sits at roughly 260% of its economy, the highest ratio of any major nation on Earth. For decades, Japan held this together through near-zero interest rates and a central bank willing to buy its own government's bonds indefinitely. Then it stopped. When Japan's Prime Minister announced aggressive fiscal expansion and tax cuts, bond vigilantes responded. Japan's 10-year yield hit a 27-year high. The 30-year yield reached levels not seen since records began. And because Japan's bond market is the third largest on Earth, the shockwave hit New York. US Treasury yields spiked in a single session. Mortgage rates across America moved higher within days. One country's bond market, one government's spending announcement. Felt in living rooms across the United States. This is how bond markets enforce discipline. They do not require elections. They do not require legislation. They do not wait. The famous political strategist James Carville once said, "I want to be reincarnated as the bond market. You can intimidate everybody." Right now, governments across the developed world are discovering something uncomfortable. The era of free money is over, and every ASEAN bond yields makes the cost of government itself more expensive. Across Europe, governments are quietly shortening the maturity of their debt, trying to hide from the bond market's verdict. So what does this mean for you? When bond yields rise, everything built on cheap money starts to reprice. Stocks, property, corporate debt, even governments themselves. The bond market is not separate from your portfolio. It is the invisible force setting the floor beneath it. If you hold any ETF, any superannuation fund, any diversified investment, bond yields are already affecting your returns, whether you know it or not. Governments can print money, they can rewrite laws, they can change tax systems overnight. But they cannot force investors to trust them. And in 2026, that trust is becoming more expensive. Because modern governments may control laws, but bond markets control the cost of survival. Every government on Earth is now asking the same question. The question bond markets have always been asking back. Do you trust us to pay you back? The answer is not yet clear.